know, it was a beat on GMV, and you mentioned 3x beat on revenue, but is the street nitpicking here on the Q1 revenue guide?
Thanks, Carl. Look, let me start with the results from Q4, then I'll talk a bit about guidance, because I think obviously that's coming up a lot right now. Well, I think 2022 marked a strong year for Shopify. It reflected not only the resilience of our merchants and our businesses, but also of Shopify itself. GMV was up 17% on a constant currency basis for the quarter. For 2022, we actually saw $200 billion of GMV go through our platform. That's 3 times more than what we saw in 2019. And about 560 million unique consumers bought from a Shopify store last year. So to date, we've powered now over $500 billion of global commerce. On the revenue side, we saw revenue for Q4 come in at about $1.7 billion. That's up 28% on a constant currency basis. Now, all that happened at the same time. Adjusted operating income grew to $61 million, and operating expense growth year on year continued to decelerate from Q3 to Q4. So what I hope people see here is that the last 2 quarters have proven that we can still drive improvements to cost structure. We can also grow revenue, and we can invest in critical areas. And then you see brands like Supreme and Black & Decker and Glossier and Mattel migrating to Shopify. So that's sort of on the quarter. In terms of the guidance, look, we can't obviously change macro, but we can focus on building the very, very best products. We can focus on growing our market share. But I think the outlook reflects the prudence. And, this morning we all got these inflation numbers that clearly everyone was surprised about given the market reaction to it. And so we want to be able to operate in a way that's resilient. We want to be able to be prudent about what the street expects. But generally, betting against Shopify has never been a successful endeavor, and I don't expect it to be now.
Yeah, I mean, your reference to 2019 makes you wonder whether or not we are still dealing with the backside of an enormous COVID pull forward. Would you argue that that's still in the mix?
Well, look, I think if you just look at some of what's happening right now, some of the macro trends, 2022, 2021 saw the largest amount of business registrations just in the U.S. alone relative to the previous 10 years. Shopify has become the de facto place to go start a business. So we expect a lot of those merchants will come to us, and a lot of this new business will come to us. At the same time, we're also expanding our products. You're seeing things like Capital and things like Audiences, and you're seeing things like our fulfillment network all gain traction. If you look at our attach rate, which is really just revenue divided by GMV, we're growing our attach rate, which we view as a proxy for the value and the usage of our products by our merchants. And so we actually think, pre-pandemic, Shopify did really well, obviously. During the pandemic, we were quickly to pivot and make sure every physical merchant that needed to move online did so with Shopify. We also went to work building our point of sale products during the pandemic. So when the pandemic was over, all those online retailers that came to us were able to reopen and migrate back to point of sale. Our Shopify point of sale GMV grew 25% for the quarter year on year. So now that we're post-pandemic, we also believe that we can continue to be resilient. But it's not just about growing our products and building better products or growing our business. It's also about operational discipline. And that's baked into the DNA of Shopify. We've been profitable 5 out of 7 years since IPO. We were profitable pre-IPO. We were not a venture-backed, we weren't raised on venture capital like a lot of other companies do. And we take our medicine when we need to. We were very early doing layoffs, which is not something that's fun to do, but we do what we need to do in order to succeed long term.
So, Harley, just sticking with the macro here, the fact that you do work with so many different businesses, from small businesses to the biggest businesses, what are you seeing in terms of your customers' behaviors, given the uncertain macro environment, and particularly on the smaller business side, where you tend to see changes in behavior earlier when the economy starts to come under pressure?
I think the companies, Morgan, that are going to succeed the most in this sort of this next version of the economy, and certainly through this year, are going to be the ones that add a disproportionate amount of value to their customers. For example, we now have a starter plan that allows aspirational entrepreneurs to get started. We know not every entrepreneur is going to succeed, but our goal is that if Shopify becomes a place to start, the ones that do become very large and stay with us indefinitely. So at the same time, we see a lot of small businesses starting with Shopify. We also we announced Shopify Commerce Components, which is what Mattel and I announced on stage. Richard from Mattel and I announced on stage NRF last month. We actually believe a lot of larger businesses are also looking to future-proof their commerce stack. They don't want to have 300 engineers on their own running e-commerce. They want to work with Shopify and have them power it. But 2, they also want to future-proof their commerce stack. They want to know that as new technology and as new innovation comes out in retail and commerce, that they can get that right away. And so we're seeing from both ends, small merchants and large merchants, that Shopify is the place they're gathering to. In terms of the other areas, so you look at Audiences, for example, which is our way of ensuring merchants on Shopify are able to reduce the return on ad spend and get a higher conversion rate and spend less on customer acquisition. Because of our scale now, we're about 10% of all e-commerce in the US. We're now able to create products for the millions of stores on Shopify they could never do on their own. And I think that's leading to a lot of good things. And hopefully it makes more small businesses more successful going forward. But If you go back to 2008, that's when we saw a lot of people join Shopify during that during that recession, when they want to supplement their income or they want to replace their income if they lost their job. And as long as you are a company that creates a lot of value, your customers will stay with you and more will join.
So just to put a fine point on that, are you telling me Shopify is recession-proof if we were to see one?
Certainly not. No company is recession-proof, but Shopify is very thoughtful about recessions or preparing for recessions. Again, this idea that we can grow our revenue at this rate, our GMV at this rate, but also, reduce operating expense growth and become more profitable over the long run, that is very important. That's the reason why, I was surprised by the reaction from the market from our Q4. We showed great growth on the top line. We also showed growth on the bottom line. And all the while, we're making these changes, like some of these layoffs that again, not fun to do, but that isn't necessary. We're taking our medicine because we want to be a long-term, 100-year company. And Shopify tends to do well when the markets don't do as well, because we are the place where small businesses and entrepreneurs go to make money.